Okay, welcome today to Canadian Mortgage Weekly, episode 154. We're taking a look today to see exactly how these capital gains tax changes in Canada are going to affect Canadians in 2024. And there's a lot of changes to discuss, and a lot of people that are going to be not infected, but affected. And so many people actually that I did some research into this, and judging by what the data I found is there's going to be about 4.4 million Canadians affected by this change on the homeowner's side alone. There's a lot of more Canadians that own corporations that will have these capital gains tax changes affect them as well. And we're going to get into that in just a moment. Thanks for joining today on Canadian Mortgage Weekly. This is episode 174. I'm hoping to shed some light on these capital gains tax changes in Canada so you can use this information to properly assess whether or not you should sell today or hold on today, buy rental properties, buy a second property, all that, because this episode is going to really affect how your tax situation is handled when you actually sell that property or when you actually dispose of that property, meaning that even if you move that property from personal name into corporate name, that is considered a disposition. So we all need to keep that in mind as to how these capital gains tax changes are going to affect those situations. So one of the first things that I wanted to get right into here, if you're just joining me today, we're talking about these capital gains tax changes in Canada and how they affect Canadians and how they're going to affect you. One of the first things you need to know is the date that this all changes. If you're thinking like I was, should I sell a property right now? Should I look at doing a disposition? Should I look at moving my property in personal name into corporate name? Well, you really need to look at this because there's a key date involved with it if you are going to do this, and you need to do it before this date. And that is June 25th of this year. Yes, that's right. I said 2024. The government is giving us all until June 25th of 2024 to dispose of any property to be considered under the old capital gains tax rules. This is huge news because there are a lot of investors out there and a lot of corporation holders that own corporations or have capital gains that they have been sitting on and rolling over till the next year. Or, for example, if you're a property investor, you're looking at selling your property this year and you've been sitting on the fence about that. This is one of those situations where you should really look at, if I sell today and close the property by June 25th, 24, I'll be considered under the old capital gains rules. And if I close the property, sell it and close it after June 25th, I'll be considered under the new capital gains rules. So which makes it better for you? And more often than not, I would say 100% of the time, if you dispose of a property before June 25th of 2024, you're going to pay less capital gains taxes. Now, there's a lot of other things to take into effect and into account about all this, and that's how does that line up with your penalties that are involved with selling that home? Is there a mortgage penalty? Is there any other income that you have that year? Really better to speak to an accountant to get the full understanding and full picture as to where you're going to be at with your tax situation at the end of 2024, if it makes sense. But June 25th, 2024 is that date that we have been made aware of that all dispositions post 25th of June will be taxed at the new capital gains rate. And I'll get into that in just a second. So if you're just joining me here today, my name is Joe Bladek. I'm a mortgage broker with 14 years experience financing real estate in the Muskoka, Simcoe, Orillia area. And I'm looking forward to discovering the capital gains changes with you today on my podcast episode. This is episode 174. And today we've just found out that the capital gains date that we need to keep in mind is June 25th, 2024. That's the date when everything changes, and if you sell a property or a corporation or realize a capital gain essentially after June 25th, 2024, you're going to be taxed under the new rules. So what are the new rules? I promised I'd get into them. So let's get into them here. So right now, in capital gains rules in Canada, the first $250,000 is actually exempt from capital gains in Canada. So for individuals, corporations, trusts, first $250,000 you make in capital gains exempt from taxes, which is fantastic because who wants to pay taxes? I know that there's a lot of people that don't like paying taxes. It's kind of a common theme. Every time I talk to someone about paying taxes, they don't like paying taxes. So if you find me someone that likes paying taxes, let me know in the comments below. All right. So they're changing this so that it's still going to be the first $250,000 is going to be exempt, but they're changing the way that they're calculating the exempt. So $50,000, 50% of the first $250,000 will be exempt. But then after that, after the first $250,000, you're taxed and the capital gains are counted as of 2/3. So 66.7% is actually the new rate. 2/3, if you want to write it as a fraction, but essentially we're going up from 1/2 to 2/3 tax inclusion rate. So the capital gain rate now, instead of 50% of capital gains will be taxed at your marginal income tax rate, the 2/3 of the capital gains that are realized post June 25th, 2024 are going to be taxed at the marginal income tax rate. So huge changes. And it's going to really make anyone that sells a property in 2024, specifically after June 25th, 2024, specifically a rental property, it's going to subject them to higher taxes. Who wants higher taxes? So that's the change there. We're still going to have that exempt amount, and this is all happening as of June 25th, 2024. And this is going to be a date you're going to see on your tax return at the end of this year when you're doing your tax return. Were there any dispositions before, or were there any dispositions after? And this is all coming from the most recent budget that was announced by Trudeau government just this week. And it's really interesting to see how they are looking at taxing the wealthy, because in the sense, this is more of a wealth tax where we're looking at taxing the wealthy individuals that have more than one property on their gains on that property. So if you're just joining me here right now, we're going to get into some more details about how this is going to affect Canadians next here. We've just talked about the changes of the capital gains tax rate in Canada, and that these changes are occurring on June 25th, 2024, and some of those changes in the rates, specifically the capital gains, instead of 50% of your capital gains being taxed at your marginal income tax rate, now 66.7, or essentially 2/3 of your capital gains will now be taxed at your marginal income tax rate. And we're just slowly getting closer to a full 100% of your capital gains being taxed at your marginal income tax rate. You know, I could see that the next step we take in a number of years will be that it's 75% and then perhaps 100% after that. We'll just have to wait and see. So before we get into some of the mortgage news today and what's happening in the mortgage industry, I wanted to talk about how these capital gains tax changes are going to affect housing and mortgages. So there's probably a lot of you that are thinking, like, how is this really going to affect me? I don't really understand how this is going to affect me. Is this going to affect me if I even co-signed on a home? Well, yes, it will affect you. So there's things that you can do to make sure that you're protected, and that's what I'll get into as well. But one of the things that you need to really make note of is that Even though principal residences are fully exempt still and have been all these years from capital gains, any second home that you own that you're entitled to will be subject to this new tax rate. So any second home, they did not indicate rental property. So a second home could indicate that you own a property with a family member. And maybe you have your name on your mom or dad's home, or you are the mom or dad and you have your name on your son or daughter's home. So if you own both your home and your son and daughter's home, then this actually capital gains tax change is going to affect you considerably, because if we ever look at selling that home that you own as a co-signer, or you're just jointly owning it with another family party, it'll be subject to tax at the new rate if it's sold and closed after June 25th, 2024. So does anybody out there own a second property or has their name on title of a second property? Well, there are 4.4 million Canadians in Canada that own two or more homes. And when we look at that, that is more than 10% of Canadians in Canada that own more than two homes. That is a staggering amount. So by changing these tax laws, we're essentially seeing the government come in, and now for these 10% of Canadians, we're going to tax you more heavily just because you own a second property. And this second property does not necessarily have to be a rental property. The second property can be a property that you have your name on because you've co-signed for that property on their mortgage. And as a part of the deal of the mortgage, you're now an owner of that property because you're listed on the deed of that property. And when the people that are living in that home, whether it's your son or your daughter or a different family member, when they decide to move out and they sell that home and you sign off on that sale because you were just the co-signer, well, these tax changes are going to apply to you, and the whole situation here could end up being that there's more tax paid. So we really need to make sure that we plan for this, and there are certain things you can do with your lawyer to help prepare for any taxable events that happen and occur when you look at co-signing on a mortgage in Canada. There are some steps your lawyer can take to ensure that you as a co-signer are 0% responsible for any tax burden, and that the person buying that home is 100% responsible for that tax burden. So something that you can definitely talk to your lawyer about when you're closing your home, but really something that you need to do if you're on title with any second home in Canada, especially considering these tax changes now that have come into play and will be coming into play as of June 25th, 2024. So, do I think this is going to affect the housing market? Well, if you're just joining me here now, we're looking at these capital gains tax changes in Canada. We're looking at how they're coming into effect on June 25th, 2024. We're looking at how the first $250,000 of capital gains is still exempt in Canada. And we're looking at how principal residences are still exempt from capital gains in Canada. So this will apply to any second home that this individual owns in Canada, and will apply to not only rental properties, but properties that you hold with your son or daughter or anyone else that's a family member or a friend, and you've co-signed for their mortgage and you're on title as a result of that. So all things to keep and consider, because when you look at this, there's a statistic out there that says 4.4 million Canadians are on title for a second home in Canada. That essentially translates to over 10% of Canadians are affected because of this capital gains uh, tax change. And if you're just joining me here now, the change is the CRA will now include 66.7% of your capital gains and tax that as at your marginal income tax rate versus 50% being taxed at your marginal income tax rate. Always, I recommend to talk to a accountant to make sure that you're getting the best possible tax return prepared for you, as well as making sure that you can strategize whether it's going to be better for you as a property investor or second property owner to sell or do anything before this date of June 25th, 2024. So that's the date everyone needs to keep in mind, because as of this date, anything sold and transferred ownership after June 25th, 2024 will be taxed at the new capital gains tax rate, which is 66.7%. That's 2/3. That is an insane amount of inclusion. And seeing this now and seeing the direction things are going, it'd be hard to not see that go up to 75% and then 100% in the future. All right, so looking at 4.4 million Canadians being affected, how is this going to affect the housing market? Well, in regards to the housing market, you can see a lot of investors right now, specifically property investors, look at listing their home as a knee-jerk reaction, trying to get a sale done before June 25th, 2024. As I thought about it, that's what I would have done. I would have thought about, is there any property that I want to sell? And if I'm going to sell it in the next year or two, I'm going to consider selling it now, because selling it now could bring a huge tax advantage versus selling it after June 25th of 2024. And when I'm saying sell it, I mean sell and close and ownership transferred by June 25th, 2024. Just signing a purchase and sale agreement by June 25th, 2024 does not mean that you've sold your property. It means that you signed to sell your property. So, differences to consider, and make sure you get that right. All right. So, that's, I think, is going to be one of the things that are going to affect the housing market. Second thing is that we might not see investors want to get into the investment market as a landlord or a property investor. Because if you're going to invest in property to flip, then you're paying capital gains if you do it once in a while, or you're paying income tax, straight income tax, if you're doing it as a living. But if you're doing landlording and you're renting properties out, then a lot of the times you own that property for 5 to 10 years, you sell it, you pay capital gains tax. And now with the capital gains tax going up this much, we could see a lot of property investors say, you know what, mortgage costs have gone up so much. And at the same time, taxes have gone up so much. And we're not even talking about property taxes because they have gone up so much. It's not going to be worth it for me as a landlord to get into the market at all, because it's way too expensive. And there's way too many costs involved to even make this worthwhile. So I could see a lot of property investors not getting into the market if they were getting into the market. So one, some properties will probably sell as a result of this before June 25th. Two, some possible new landlords or existing landlords will not want to spend any more money investing in property as a result. So that's two. And third outcome, I think, as a result of the first two happening, first, people selling rental units, so less rental units available. Perhaps they are converted into single family homes, because as people sell duplexes and triplex, I see a lot of newcomers buy these duplexes and triplexes and move in as a whole family together to take advantage of the space and the ability to qualify together. So it becomes a multi-generational home, it becomes an owner-occupied home. And it takes essentially all those rental units off the market. And if new investors are not getting in, then there are no new units coming on the market. So units being taken off the market and no units coming in, which means less rental units available. So the third outcome I could see as a result of this capital gains tax would be less rental units available, meaning higher rents for Canadians. But at the same time, I think this whole plan is to help Canadians. So I'm not sure what we're getting at here. Excuse me. So this could even increase rents for Canadians across Canada for anyone looking for a new rental unit. When I say new rental unit, I'm not talking about Canadians in their existing rental units right now, because if you're in an existing rental unit, you probably got that price locked in and it's not really going to change in the coming future. But if you're looking at moving and paying current rent prices, you'd be in a situation where you could face higher rental prices as investors are getting out of the market and new investors are not coming in to the market. So it could actually push rent prices up higher. So if you're just joining me here today, we're looking at how this will affect the housing market. We're looking at how there could be existing landlords that decide to sell their rental properties before June 25th, 2024. And as those rental properties are sold, a lot of the times they are converted into single family homes or multi-generational homes, and then they become owner occupied, taking rental units out of the market and making more rental demand for the existing units. Second outcome could be that new investors and existing investors decide that they don't want to invest in property anymore, and that they decide to invest in something else and put their money somewhere else. And if they do decide not to invest in property anymore, then that will essentially not bring any new rental units into creation, and we're not going to have any investors available to buy those units that are being sold because of this capital gains tax change. So that could be another outcome. So no new investors and the existing investors are leaving the market. And then as a result, less rental units are available in the market. And as a result, rent prices then go up for the existing available rentals. So if anyone's moving and having to pay market rents for the rental unit, they're going to be faced with higher rental costs. That's really unfortunate, because this whole plan is to help Canadians and to help Canada with the economy and help balance the budget, all that stuff, right? So it's really unfortunate that we're going in this direction, because with being able to tax wealthier Canadians on their capital gains at the 66.7% inclusion rate versus 50%, we're essentially taxing the wealthy more, but as a result, less rental units could be available. And as a result of that, could push rent prices up further. So really unfortunate to see that. However, that could be the case that happens in the next coming months. So let me go down some of the metrics here that I covered here today before I get into some of today's mortgage stats and what I can see happening in the rates market before next week's episode. So we looked at the capital gains tax changes in Canada. We looked at how we have a date of June 25th, 2024 for anyone to sell property, make a disposition to be able to claim the old tax rate. And as of June 25th, 2024, anyone who disposes of a property post that will have to pay capital gains at the new rate. The new rate is 66.7% versus the old rate, which was 50%. So that is a change from 1/2 and an increase to 2/3. A very scary and sizable increase on capital gain taxes for Canadians. Principal residences remain fully exempt from the capital gains tax, so that is awesome news for anyone that owns their own property and only owns one property. However, if you're like 4.4 other Canadians that own 2 or more houses, whether it is as a rental home or you own a second home with your grandma or grandparents or parents or brother or sister as a cottage or as something, or you're co-signing, that will be affected as well. So really something to consider here, anyone that's co-signing or anyone that's co-signing on a family home, that they look at how these tax changes will affect them. And one thing in addition to that is that the first $250,000 of capital gains will remain exempt for anyone selling anything after June 25th. You still have that personal exemption for individuals, corporations, and trusts of $250,000. All right. So thanks for watching. We're just going to get into the some of the mortgage statistics here that I like to follow. And we'll cover these off before we end the episode today. If you're just joining me here, today's is episode 174 of Canadian Mortgage Weekly, Canada's weekly mortgage news video podcast. We just covered off how the capital gains tax rates in Canada are changing considerably, and all happening for anything sold and disposed of as of June 25th, 2024. All right, so let's take a look at the fixed interest rates in Canada, and let's take a look at the trend that they're going in this week. Last week, we did see a trend of them stabilizing. The prior week, we did see a trend of fixed rates going down. However, this week, we are seeing a trend of fixed rates climbing back up. You know, I hate when rates go back up, but at the same time, I didn't think that it wouldn't go back up, because we saw inflation go up in Canada from 2.8% to 2.9%. And because inflation went up, I have seen fixed rates kind of tick back up as a result. People think that rates aren't coming down anytime soon because of the inflation numbers being higher this month. So inflation did go up to 2.9%. Overall, we are still showing, I think, a trend downward for inflation. We did see 4.4% in this time last year. We saw a decrease there to 4% in August of 2023, then 3.8% in September 2023, then 3.4% in December of 2023, and then we saw 2.9% March of 2024. Going on this trend line, I don't see inflation coming down to that 2% mark by using this trend line until the beginning of 2025, which could indicate that maybe the Bank of Canada will have no reason to lower interest rates until then. I believe that rates might come down in the fall of this year. We will see. There are some lenders that are saying that rates will come down sooner, but with these inflation numbers, I don't see that happening. The next rate announcement, everyone, is in June. It's happening on June the 5th, Wednesday at 9:45 a.m. Join me here on Canadian Mortgage Weekly as I cover off that rate announcement live right here on my channel. Follow me to be notified of that rate announcement, and make sure you like and comment and share this video. If you're looking at booking a time with a mortgage broker, I have 14 years experience, and you can actually book a 5-minute call with me in the link in the video description below. I would love to be able to chat with you with your specific mortgage and with your specific scenario to give you some ideas as to what you can look at. Okay, and as I mentioned, thanks for joining me. We looked at capital gains numbers today, and if you have any questions, book a call with me. We'd love to sit down with you and chat about how this may affect your mortgage or your home when this comes into place. Okay, thanks for watching, everyone. We'll talk to you all later.